Welcome to the Riskwiser Zone, your premier destination for insightful analysis and expert commentary on the world of stocks and finance. I'm your host, Luis, and we're excited to have you join us today. As we dive into the latest market developments, let's start with a story that's been making waves in the agricultural sector. According to recent reports, ACE investor Dolly Khanna has increased her stake in Mangalore Chemicals and Fertilizers to 2.18%, up from 1.75% as of December 31, 2024. This move has sparked interest among investors, given Khanna's reputation for identifying hidden gems. Mangalore Chemicals and Fertilizers, a subsidiary of Zuari Fertilizers and Chemicals, has seen its shares surge by an impressive 66.25% over the past year. The company's strong performance can be attributed to its dominant position in the fertilizer market as well as its diversified product portfolio. However, it's essential to note that Khanna's investment decisions are often shrouded in mystery, and it's challenging to predict her next move. As of March 2025, her portfolio net worth stood at Rs 372.6 crore, with a 3.7% stake in Prakash Pipes, a 2.8% stake in MK Global, and other notable investments. In another significant development, the fertilizer sector as a whole is expected to witness growth, driven by government initiatives and increasing demand for crop yields. This trend is further reinforced by the news that Rabi crops have seen a record production this season, with wheat output touching an all-time high of 112 million tons. As we navigate these developments, it's crucial to maintain a balanced perspective, considering both the opportunities and challenges that lie ahead. We'll be keeping a close eye on how these stories unfold and providing you with expert analysis and insights to help you make informed investment decisions. In other news, the broader market has been experiencing volatility, with the Sensex and Nifty indices witnessing fluctuations in recent trading sessions. As we move forward, it's essential to stay vigilant and adapt to changing market conditions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Stay tuned for in-depth analysis, expert interviews, and timely updates to help you navigate the complex world of investing. Welcome back to the Riskwiser Zone. We're halfway through our show, and we've got some fascinating stories to dive into. As your host, I'm committed to bringing you balanced and unbiased analysis, so let's get straight into it. We're seeing an interesting dynamic play out in the markets today. On one hand, we have companies like Bulgara Auto and Hero MotoCorp, which are dealing with the challenges of a global slowdown. On the other hand, we have giants like TCs and Infosys, which seem to be navigating these choppy waters with relative ease. Sanjeev Prasad, from Kotak Institutional Equities, shared some valuable insights on this topic. He pointed out that despite the global economic uncertainty, Indian companies are still commanding high valuations. In fact, he questioned how investors can justify higher multiples when growth is slower and risks are higher. Now let's take a closer look at the numbers. The Nifty 50 is currently trading at around 17,500, with a price-to-earnings ratio of over 25. This is significantly higher than the pre-pandemic levels. Meanwhile, companies like TCs and Infosys are trading at even higher multiples, with PE ratios above 30. But what about the commodity sector? With raw material prices coming down, companies like cement manufacturers might see some benefits. However, as Sanjeev Prasad cautioned, these businesses are highly competitive, and it's unclear how much of the benefits will be retained by the companies themselves. As we navigate this complex landscape, it's essential to keep a level head and consider multiple perspectives. While some investors might see opportunities in the commodities sector, others might prefer to stick with more stable players, like companies. Ultimately, the key takeaway is that investors need to be vigilant and adapt to changing market conditions. Whether you're a seasoned pro or just starting out, It's crucial to stay informed and make informed decisions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had an exciting show so far, discussing various market trends and analysis. As we wrap up today's episode, let's take a closer look at some recent news that's been making waves in the financial world. We've got two interesting stories to share with you. Firstly, several companies including ICC Prudential Life Insurance, SPI Life Insurance, and Infosys are set to announce their quarterly earnings this week. This could lead to some significant market movements, so it's essential to keep an eye on these announcements. Secondly, Rajeev Agrawal, the founder of DoorDarshi India Fund, shared his insights on the recent 90-day reprieve on tariffs imposed by President Trump. According to Agrawal, this move is not a full policy reversal and will likely create more uncertainty in the markets. He advises investors to understand the impact of tariffs on their portfolios, but not to make it the only deciding factor. Agrawal also shared his investment strategy, focusing on domestically focused sectors such as lending and capital markets. He believes these sectors will continue to perform well despite global trade tensions. It's essential to note that every investor has their own unique approach, and it's crucial to do your own research and consider your risk tolerance before making any investment decisions. As we conclude today's episode, remember that investing in the market always involves some level of risk. It's essential to stay informed, diversify your portfolio, and avoid making impulsive decisions based on short-term market fluctuations. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.